Welcome to the Wheelbarrow Profits Podcast, where you get multifamily investing made real. Learn from top players in the real estate investment world as they share their secrets with you and discover proven strategies on apartment investing that actually work. To learn more about Wheelbarrow Profits, visit jakeandgino.com, your one-stop shop for everything multifamily. Now to your hosts, Jake and Gino.
Hello, everybody. This is Jake Stenziano, host of the Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, the chef, the father of six, the best-selling author, the G-Daddy, Gino Barbaro. Gino, how's it going?
Mr. Stenziano, I'm going to say making it happen like you are this morning, bro.
M-I-H. Today's guest is Dr. Buck Joffrey. Buck is the host of the Wealth Formula Podcast, where he teaches professionals wealth-building strategies and ways to create multiple streams of income so they can have more control over their time. MSIs, talking MSIs today. So, Buck, how's it going today?
It's going well. How about you guys?
We're doing fantastic.
Doing good, Buck.
Good.
Doing great. So why don't we start off, I think, at least by talking about how you are helping people get more time freedom for themselves and the motivation behind that.
Yeah, I mean, so I'm, as you mentioned, I'm a physician. So, I was your classic A student, worked really hard and got straight A's and, went to the fancy schools and actually started out, down this line of, I started out as a brain surgeon and then switched over to non-brain head neck surgery. Finished, but the bottom line was I was still working hard, working 80, 100 hours a week during residency, getting paid what amounted to minimum wage at that
You're
point.
Being hazed. Let's be honest. You're being hazed.
Yeah. And this was before these 80-hour work weeks and that sort of thing. So this was I think 2000 and. I finished training in 2008, 2009, but at the beginning of that, and this is a 7-year training program, it was the laws were a little different, and those coincided with the years that the hazing is the worst. But so when I finished, I finished in 2008, 2009, and it happened to be around that time, as you know, when everybody was losing, all their money if they were in the stock market, and or if they were, if they were flipping houses or whatever, but. I was seeing what was going on. I had some influences from my own father, who's a landlord, and he kind of got in trouble for a while when he switched over and started playing the stock market during the .com era and lost a lot of money. And he learned his lesson, so he went back into real estate. And so when 2008 happened, for him it was a feeding frenzy. And whereas everybody else lost a ton of money, he made a ton of money because he was buying things at deep discounts. And so for me, seeing that and all of a sudden getting into a world where I was making money, not only just because I finished my residency, but I'd also started a few businesses, and I was actually starting to make a lot of money. I had to figure out how I was going to deploy it in terms of investing, and so I taught myself, and ultimately was very successful. And at that point, sort of wanted to try to help others to look at things a different way from the way that they're traditionally taught.
So, Buck, let me ask you, where's your passion lie? Does it lie in being a doctor and being a business owner and bringing knowledge to people? Where do you find the most passion in your life right now?
It's a good question. I mean, I like being a doctor. I'm a surgeon, so I like operating, and so I still operate, a couple times a week. In fact, I'm wearing scrubs right now because it's one of my operating days. But it's not. But I don't want to have to do anything, right? So I don't want to have to do things, and therefore, my businesses are such that at this point, if I want to, I can just stop. And even my medical practice, I have multiple medical practices, businesses in different fields and fields I don't even practice in, and those guys are doing the work. And so for me, being a physician and being a surgeon, I enjoy it, I like it, but I think my real passion and my real identity is as an entrepreneur and ultimately as an investor. So.
I want to say this right off the top. I find you truly inspirational because I know when you have to go and do a surgery, I have friends who are doctors, it takes a lot out of them, a lot of mental energy, a lot of actually focusing. And for you to have the ability to go out and do other businesses, there's nobody that's listening to this podcast that should have any excuses about not having enough time or enough energy, because I know being a doctor, you need to focus on what you're doing. You've got somebody's life in your hands. You can't mess around, right? But then at the same time, you've got other stuff nagging at you, whether you have children, whether you have other businesses. So I applaud you for that. That is really, truly, to me, inspirational.
I think certainly for me, it's helpful that I have a little bit of ADD, and it's difficult for me to do the same. I'm not the guy who's going to finish training and then do the same thing for 20, 30 years and then call it a day. It's just not exciting to me. So I think for me, it's also a personality issue. Just I want to. I want to constantly learn. I want to constantly stretch myself, and so it's just a lot of it's an internal drive.
I want to learn a little bit more about you. Can you rewind and tell me why you became a doctor? I mean, how you chose the profession?
Yeah. So I mean, I think it's like any like the vast majority of physicians that I know, the real reason for wanting to become a physician, was really just to help people, right? And I was in college, and I was really realized I was really good at math and science. I was a biochemistry major and cell physiology, and I had some what do you do with that? You can either go to a lab and get a PhD. I was thinking about that, but then realized I like being around people more, and so I decided to be a physician. And then when you become a doctor, at that point you try to figure out, well, am I a guy who likes to be in the room and diagnose all the time, and that's my thing, or do I like to operate? And I've realized that I like to operate. So I think it just really just came down to that. But the real motive was nothing more than I wanted to be a physician because I'm good at science and because I thought it was a really noble way to live my life. And ultimately that, it was a career that I didn't have to worry about money. Although frankly, I didn't know, money never crossed my mind. I know it seems like now with all the things I'm doing that might be a motive, but it never crossed my mind, and business never crossed my mind.
And that's what happens. You wake up, you're 40 years old, like someone like me, and all of a sudden you never thought about money. You're like, what happened? I didn't make any money, because you never think about it, right? And it's just amazing how the mind works. And then once you start having kids and mortgages, you think about it, and it might be too late, but it's never too late because you can always focus on it. Let me talk about all the real estate, all the businesses you have. Let's focus first on real estate and why real estate. Yeah.
So again, going back to 2008 and 2009, I finished my training, went to work for a big national company. At that point, I had some subspecialty training in cosmetic surgery, so I was doing working for a big cosmetic surgery company. And after about 9 months, I started to realize that this isn't what I wanted. I mean, because what was happening is that I was being managed by a bunch of non-physicians, and frankly, I had a manager who had just been hired who was managing a hair salon before, and I was having a lot of trouble with that. Here I was, actually with a huge ego, having graduated from one of the best programs in the country, and being this surgeon guy and whatever. I had a huge ego, and so I didn't get along with management. They fired me, and it wasn't for the way I practiced through my surgery. It just personality differences. It was a big failure for me. So I started my own businesses. At that point, I started my own first business, which was a cosmetic surgery business that I sort of cloned from where I was at. And 18 months later, I became a millionaire and started three other businesses, and then started growing these businesses, started making a bunch of money. So what happens when you start making money? Well, you got to figure out where it goes. And so real estate came in because my dad, again, demonstrated to me throughout my life that I never worried about money. And he's I'm the son of immigrants. My dad came here in the late 60s, and as an engineer, an engineering scholarship, practiced engineering for 2 years, and bought his first duplex, and then went and took off from there. So what I realized was that, you know what, I never wanted to be a landlord. Our phone was ringing off the hook all the time. But what I did know is that if you invest in real estate, you can definitely make a living, and you can definitely do well.
Sounds like that was a good fire. It was good to be fired there, right? It worked out well.
That was the best thing. That was the best thing that ever happened to me. And I would just point out, I talk about my inspiration from my dad. But one of the things that's really important is that right around this time. Literally the day I graduated my training in 2008, July of 2008. My wife and I got married the next day. On the way back from our honeymoon, I picked up a copy of Robert Kiyosaki's Cash Flow Quadrant. I didn't have any idea who Kiyosaki was. I didn't have any idea what this book was all about, but it was like one of the only books that looked remotely interesting for the plane ride. And it transformed me. Absolutely transformed me from a guy who was completely academic, face down, and just seeing, oh my gosh, there's this entire other world out there. So sometimes I think of, like my dad, there's that rich dad, poor dad thing. My dad was a pretty rich guy. My dad is a pretty rich guy, but I mean, Robert Kiyosaki's richer, so he's like my richer dad, I guess.
You know what's funny? But you know what's funny about that book? You fall completely into it. Like, it's the ES quadrant. You were on the ES. You were definitely self-employed. I mean, and doctors must resonate. Any doctor, any lawyer, or any professional is well paid. But then when you go over to that BI side where you're making your business, your investments, that's probably, you saw that for the first time like I did. I was like, wow, I have one little restaurant here, and I fell in the same bracket as you did, working every day for a job, not being able to create wealth, being hammered with the taxes. And the book is great on why. That it will transform you. The next step on how, it leaves a little, leaves a little bit to be desired. But for you to actually pick up that book and just transform yourself, it's done it to a lot of people. And I credit him, even before he was back in 2001. I read all his books since 2001. And I totally tell everyone, pick up those books. If you know nothing about real estate or about investing, start reading those to shift. Because you have to first shift your mind, right? If your mind doesn't get shifted and you're stuck in your same paradigm and you don't see the future, you're going to be stuck there. I mean, no matter what anybody's going to tell you, it has to happen to you personally, don't you think?
Yeah, absolutely. I think it really is a mindset shift. And this is something that is actually, one of the reasons, it is the main reason for Wealth Formula podcast and wealthformula.com, and because particularly for people who've been success their entire lives in school. I mean, listen, Robert Kiyosaki talks about this all the time. Why A students work for C students and B students work for the government or something like that. And he's absolutely right. And he's right, because the A students, we had our heads down in the books and we were studying and we were told what to do, and we got it right, and we never failed. And in order to be a true successful entrepreneur, you have to fail. You have to fail. And you have to be okay with that sensation. And so for me, getting fired that first time was the first time I ever failed. First time. And there's different ways people react to it. And for me, it was almost liberation. Like somebody handed me a failure for the first time. Now, what are you going to do with it? There's that whole, there's this word, in the Chinese word for crisis is also opportunity, right? And there's a reason for that. So when something happens and it shakes your world, what are you going to do with it? And that's exactly what happened to me.
Now, when you talk about the Kiyosaki, I think it's great, because I totally agree with that. Those C students, most of us, they're entrepreneurs, have to have some type of emotional intelligence, social skills. A lot of the A students don't have those social skills. And now they're finding out in the last 10 years, those are actually more important than book smarts. It's really amazing. If you can connect and build rapport, and they're, through all NLP techniques and everything, they're finding out that that's one of the more important skills that an entrepreneur can learn. So I think that's amazing for entrepreneurs to figure that out and say, I need to start building rapport with people.
Yeah, and I think that's true. I mean, there's the whole network issue, the whole idea that your net worth equals your network. And I think there's some truth to that. I also think that again, with regard to professionals and with regard to, lawyers, doctors, people who who've really had their nose in their books and gotten A's, the concept of failure is critically important. And I think I've learned 10 times more from failures in business than I have from successes. And, and I think one of the things that keeps people from even taking a leap into entrepreneurship, or even, in real estate, and the way I do it, I consider it entrepreneurship, is fear. So you got to get over the fear, and you can't learn everything in a book, right? You have to go out there and do it, and you have to, learn a thing or two from this whole school of hard knocks thing, which is a very real thing.
You had said when you got fired, you started a business. 18 months later, you're a millionaire. I know it's a long question, but walk me through the framework of how you start a business, make it so successful, and within 18 months you're a millionaire. How does that work? How do you do that?
Yeah. Well, first of all, you have to have the right business, right? I mean, you can be careful. I mean that. So I work for. So let me give you some specific. I worked for a company called Lifestyle Lift when I left training. Now, Lifestyle Lift, I don't know if you stay up at the middle of the night. They used to have these commercials where the big saggy neck, and this person, and the next thing they came out and they looked gorgeous and stuff like that. Well, they were doing facelifts, it actually is a really interesting thing, because this guy who came up with this company, who was a similar training to me, he basically took a concept of doing these mini facelifts and doing them under local anesthesia and doing them very quickly. And he took that concept and he plugged in the hair club model, where you have, or the Bosley model, where you're looking at, all of a sudden you're seeing these guys with hair and they didn't have hair before. And how did that happen? Right? This progressive unveiling model, and they use heavy television, heavy radio, and now, of course, heavy internet as well. And so what he did is he took a concept of a different procedure, plugged that variable into the wheel, and started a new business. And so what I did was actually not too different from what he did. When I got fired, I had a covenant that said I couldn't do facelifts. I couldn't advertise TV and radio on facelifts. So that was a problem, because that's pretty much all I could do in cosmetics wise. So I went around the country trying to learn some liposuction techniques, because liposuction happens to be the number one procedure performed in the entire world, the most popular. It made more sense to me to do it on a high volume. So I learned that. I came back. I trademarked a term just like the guy did with faces. And literally what I did is I plugged in a different procedure, a different variable into the same business model that he was using, and that Bosley was using, and that Hair Club was using, and that Vein Centers use. And I started to market liposuction, and it worked. And, spent a lot of money, took some huge risks. And within 18 months, I mean, I was doing more liposuction than anybody in Chicago, which is huge, which is a lot of liposuction.
Wow.
Sucking a lot of fat.
That's a lot of fat, right.
So, Jake, basically the model is what we talk about. He got massive education. First, he had a massive mistake. Then he got massive education. He got first mistake, then he got pissed off. Then from being pissed off, he found out what he did wrong. He educated himself. He did not reinvent the wheel. He figured out
followed a framework. Yeah.
He followed a recipe, and then he took massive action. So your thought leads to your desire, leads to your massive action, leads to the results. So that within 18 months, he exploded because he followed the framework and he didn't have to reinvent the wheel, and he took massive action. And I think the motivation was you got pissed off. So you're moving away from pain, and you're probably going towards pleasure, because you could probably see the outlook of saying, wow, this is an awesome business. Yeah, but it's not always about the money. I think, obviously your first business is, but I think he was motivated by saying, you know what, I'm going to prove these guys wrong. I didn't make a mistake.
Hey, listen, it's a little about the money, okay? Stop.
But I'm trying to get it from my perspective, saying it's not always about the money. It's about getting back at somebody who fired you and showing that I'm just as good as you, and if not, I'm better than you. That's what would have motivated me in that instance, I think.
Yeah, I think the anger part was a big part of it. I was really pissed off about it. Mm-hmm. The thing is, while I was working for this company, I kept thinking to myself, I could do this. I don't have to be the worker bee. I could be the guy who's employing other guys. Why can't?
It doesn't sound like the model was rocket science, right?
Yeah, no, it's not. And it's not brain surgery. I can tell you that. It used to be brain surgery. So listen, at the end of the day, everything that I've had success in since then, again, I haven't. Listen, I don't consider myself a. What I'm doing is I don't reinvent wheels. I look at people's models and what they're doing, and I try to put a little twist on them, and that's effectively what has created success for me in everything that I've had success with. Which it's like looking at somebody and trying to I had an interesting conversation actually with Russell Gray yesterday from Real Estate Guys. He's a friend of mine. And we were talking about my syndication business, and I told him, Russ, I just figured out this whole thing, and it's really not that hard. I was looking at guys like Kenny McElroy and all that, and wow, that looks so complicated. But no, this is really not that hard. I mean, of course, executing it is very hard, but there's a certain elegance to businesses that succeed and that do really well, and the elegance is that they're simple. They're conceptually very simple. And then when they're conceptually simple, then it's really up to you to make it happen, right? And that's really the same with every business I've had success in.
I was just reading about Brian Tracy yesterday about communicating and about doing speech writing. Something that looks simple, he says it takes a lot of work to do. So although it's simple, you still have to get all your ducks in a row. You still have to get all your paperwork. You still have to get all your partnerships together, whatever it is. So although it may look simple, and I agree with you, conceptually it's not very difficult, but there still needs a ton of work to go into that process.
You're right, but once you have that framework in your head and you realize, okay, you need this A, you need this B, and then you put them together and you've got C.
Follow the yellow brick road.
Follow it. Yeah. And so once you have that bigger framework in place, then you're right. There's a ton of details, but it's a lot more gratifying, right? Because you know that you're actually headed in the right direction, as opposed to just waffling out in the breeze.
It's a great point, and that's why we created our framework for multifamily investing: buy right, manage right, finance right. Because we realized it's a three-legged stool. You got to get them for the right price. You got to come in and buy right, or it's going to make it hard for the rest of the time of the investment. You have to manage it right. That's ongoing. That's constant. And if you got to get your financing right, the longer the term, and if you can get a fully amortizing FHA 35/35, that's going to be the most secure financing you can put in place. So that's what we really like to teach, and that's why we say follow the yellow brick road. You get those three things right, you're going to be in really good shape.
Yeah, and sometimes it takes, particularly with something like you're talking about, it's going to take a few mistakes to figure out what the right pathway is.
Yeah.
But once you figure it out, and you actually have to get out there and
execution's a different thing. Yeah.
Right. You have to do it. But once you start doing it, it's that whole idea of how do you learn something and being unconsciously incompetent, moving to consciously incompetent, and then moving to competent, and you know what I mean. Anyway, you're moving up to this.
Yes.
You're moving up to this point. The next thing you know, you're doing things, and you're doing things with that you're not even thinking anymore because it's really easy for you, but you forget where you started. And I liken that to surgical procedures that I learned, right? So there are certain things I can do I literally can. It's just hardwired in my head. The complexity of these things that when I was first learning them seems so ridiculous, and now I can have a conversation with somebody who's handing me instruments while I'm doing the same thing about something else.
Yeah.
It's that goes for everything. It's not just about surgery; it's about everything.
I agree with you. It's like teaching my teenage daughter to drive. In the very beginning, when we learn how to drive, we've got hundreds of things we have to pay attention to. Within 2, 3, 4 years, you're driving, not even thinking about it. You become so consciously competent that and that's what it is with real estate and with anything else. We don't give ourselves those 2, 3 years to learn everything. We want to get in there right away, buy the duplex, and all of a sudden have 100 units 6 weeks later. It doesn't work that way, and that's the problem. The entrepreneurs have to make mistakes, and the definition of an entrepreneur is someone who makes enough money to pay for their mistakes. mistakes, and I fall into that category. I'm sure
Right.
a lot of people fall into that category. The problem is that I didn't quit. I started out with I started out with the mixed-use building, mobile home parks, industrial, commercial, single families, and then finally I didn't quit. I made a lot of mistakes on those. I gravitated to multifamily, and I had already learned. And like you said, we took a model, Jake and I, that everyone's using, and we just expanded upon it.
Yep.
I wanted to ask you something about the syndication. I agree with you on syndication. Jake and I had the epiphany about 6 months ago. We thought syndication was crazy. If you have your own money, why don't you want to do it? But we're at the point now, we've got almost 800 units. We can't scale anymore. And now, like you said, the paradigm shift, the light went off. Wow, syndication is really an amazing model, and
Yeah.
I'm glad we're open-minded to it. I mean, if we're not open-minded, we wouldn't even go down the path. We're checking it out. What do you like about syndication, and how has that changed your model in real estate?
Yeah. So, when I started making all that money in 2010, what I started doing was I knew I didn't want to be a landlord, and reading Kiyosaki's work, that was really helpful because he basically was like, well, you don't want to be a landlord. And so so I was taking the fact that my dad I knew succeeded, so I had a model of success, and that it wasn't all risky and scary like everybody said it was, and took Kiyosaki's thought on running it like a business. So I started buying apartment buildings, buildings that were sort of typically under 20 units. Okay. And frankly had some really, really good luck and, at least one really bad one. And so that worked for me for a while. And, of course the market started tightening up, so the deals weren't quite out there as much. But what occurred to me was that I was looking at real estate in a different way than I was looking at my businesses. And I really shouldn't. And that I wanted to start looking at larger assets, because what I found in business in general is that I really believe this: bigger is better and safer.
Yes.
I can tell you this from personal experience of getting screwed multiple times. From my own businesses when they were smaller compared to when they're bigger, having multiple businesses generating combined $20-30 million a year versus when we started at $1 million or $2 million or whatever, that when things go wrong, you're in much bigger trouble with small, right? When you have big, there's a little bit more fudge factor. And I think what I think for me an epiphany was that this, real estate is no different than that, right? I mean, if you have if you're buying, like I mentioned, I'm looking at a $11 million asset in Phoenix right now. That's I don't want to say 150 units or something like that. But they have an outside management company that's managing that does all their books, that they have the employees in place and so on and so forth. It's a stable asset, right? And you can't cook the books if you have an outside management company and they're doing all your accounting for years on end, et cetera, et cetera. Mm-hmm. My own experience was that at least one of the buildings that I bought, the books were completely cooked, and I lost a lot of money on that deal. And that can't happen. I mean, maybe it could.
What were they lying
It's
about?
hard
The occupancy? Were they lying about the price per unit or the rents per unit? What were they doing?
Yeah, it was a tricky thing because it was like in a Class D area. It was actually the first building I ever bought. Okay, so they'll tell you the fact that I didn't run away the other direction is remarkable to me. But what happened was it was about a 14-unit building, Class D, and the paper it looked awesome, right? But the problem was that it was being managed by the landlord, and that landlord happened to own a number of buildings in that same area. Okay, and it was pretty clear what had happened. Without getting into too much detail, was that he was shifting rental income from buildings that were performing in the area.
He was pouring it
into this building for the purpose of selling it. And once I inherited it, pretty quickly realized that more than half the people weren't paying rent. And so, of course, I was also a rookie here. I mean, there's things I could have done to be during due diligence that would have made that more obvious. But I think the excitement of owning a building got in my way, and I think the emotionality of it.
Yes,
he fell in love, Gino.
My way.
He fell in love with the D.
Yeah.
Biggest mistake, right?
It's a big mistake, and so of course, it cost me. At the end of the day, I think probably lost between price of sale and the amount of money I lost over the few years I owned it, was probably $500,000.
Shit.
And
I'm in the same situation. I know exactly what you're talking about. You look at a property, you're not doing your due diligence on where the market is, and the problem is if you had a competent real estate broker actually supporting you or performing with you, the broker would have looked at it and said, "Hold on a second, let me get some bank statements." It's not really. It's a very simple thing to rectify.
Yeah.
Let me see the last 3 months of deposits and then see what's going in, what's not going out. Let me see all the tenants, all the leases, if they're month to month. There's a lot of red flags there because I've been up in that situation, and it's all about teamwork. I want to get into teamwork with you a little bit later, but I always stress this on the podcast. To have a competent and a broker on your team is one of the most vital team members, I think, because they're there. They're supposed to advocate for you. They bring you deals, and they really educate you and what's going on also with the deal. So, I mean, if you had one, I think it would have helped you out a lot.
I think that's true, and I also think for me too that was one of the reasons. Again, the idea of getting into bigger assets made a lot of sense to me because, again, I think if you're looking at 200-unit buildings that are being managed professionally, it's really hard to cook the books. So,
You know what's the funny thing about the bigger? It's hard. We had Cardone on a few months ago, and it's hard for the little guy and for somebody starting out. He always says, go for as big as possible. And I never understood that until you start doing a $10 million deal. It's just more zeros. It's practically the same amount of work, and you're getting paid more to do it. I mean, mortgage brokers don't want to do deals less than $1 million because if they do a $300,000 mortgage or a $3 million mortgage, it's the same amount of work for them, and they're getting compensated more. So, I would say
that it might even be less work, Gino. I mean, just because you have economy of scales, you can afford
and employees helping you out with
and employees. That's right. I mean, I think that's a really big part of it. And and again, to me, the idea is, it's much more in line with the way I run things in my businesses, right? To look at my investments as businesses, I think, and that's why I've shifted in that direction.
You're an asset manager. You're managing the asset as opposed to being a landlord. That's really hard for a lot of people to get over because they fall in love with the bricks. What is their vinyl siding? Is it have nice color in the bathroom? As Jake and I like to say, our real estate broker brings us out and goes, "Look at the view." I mean, really, look at the view. Who that I could care less what I'm looking at.
Yeah,
you know what I'm saying. So it's important.
Guys, to me, it's like this, and I think. I was talking to Keith Weinhold about this. Keith made he said something which I think resonates with me. He said, a lot of us who say we love real estate don't necessarily love real estate. We love what real estate does for us. And that's very true for me. Listen, I like the idea of owning a cool looking big building, right? But really what I like about it is that, it's a solid asset that makes money and it provides income, and that helps create freedom
and control.
So,
you have control over it,
right. So the one thing I would say to your folks out there is that I think, I think that at least thinking about taking it to the next level is a good idea. You don't have to have a ton of money. You really don't. I mean, in fact, in some regards, it's easier to do larger syndications if you don't have a lot of money than it is to do, $1 million building, because if it's $1 million building, it's all your own finances, right? You're not going to syndicate $1 million building or even an $800,000 building. I mean, it's all you. But if you're doing a $5 million, $7 million building, it's all everybody else. And the underwriting is typically based on the performance of the building, not on necessarily on your own financials. Now, obviously, there is some issues there, like you probably need to find a co-sponsor the first time who's got financials, who's got a net worth, and things like that. But it's really, I would encourage people to look into it if that's something that they've thought about but felt like it was too big or too hard, because I don't think that that's the case.
Don't you think I always fall into the assumption, or I grew up learning that my business was my lifestyle, and don't you think that real estate affords your lifestyle being affording your business? Because I always had to work 7 days a week, and I think real estate gives you that ability to transform your lifestyle to do whatever you want to do. If you want to work on Saturday, you can. If you want to take a week off, you can do that. So I think that's another thing that real estate affords the person to do. Don't you?
Yeah, I mean, I think for me, it's all about, at the end of the day, it's all about owning real assets and things that throw off passive income. And certainly real estate is probably one of the best ways you can do that. Certainly, in my view, multifamily is probably, listen, people have to live somewhere, right? So it goes back to Maslow's hierarchy. What do you need? You need food, physiology, you need security and safety. And so these are things that, you have to have. So if you want to have a nice, stable asset, this is a good place to be. And again, like you said, it's about residual income is ultimately what it's all about. And that's how you create, that's true wealth.
Jake likes to say you can't live in the internet, right, Jake?
You can't live in the internet, baby. You got to live somewhere. You can't
right.
live in Amazon yet, but you can buy everything else.
Let me ask you: how have you created business? How have you created teams around your business to support?
So I think there's a couple different things there. I mean, first, if you look at the concept, Jim Collins' concept of good to great. Getting the right people on the bus and then figuring out where they get seated later. That's certainly one of the things, because I think first and foremost, what I've discovered over time is that people. It's interesting because scaling businesses in part is about making it less dependent on people, but you can't scale a business unless you have the right people. Right?
Yeah.
So you've got to find those people, and you've got to find those people who, above anything else, are competent and loyal, and that's critical. I think the other thing is, and what I'm finding, for example, in the syndication business, was you have to find people who are smarter than you. And what I mean is, obviously, it's not it's the IQ or something. It's people who've done things that you haven't done. If you're going to go into a dark cave, go in there with somebody who's been there before.
Get the coal miner.
That's right. So I think that's the other thing. I hired an acquisitions guy who's been doing acquisitions for 30 years as a Harvard MBA and underwriting. He underwrites. He's been underwriting deals for 30 years. I mean, guy knows a lot more than I do, right? So trying to find people who are smarter than you, and not necessarily by IQ, but they've done things that you haven't done, and that they have gotten to a competence level that you have not.
That's funny, Jake. We fall into that. We're not the brain surgeons. We're usually not the smartest guys in the room, Jake and I. So that's real easy for us to to bridge the gap, right, Jake?
Absolutely, totally.
Let me ask you, what is your best real estate advice or tip for the listeners?
Well, I think based on what we've talked about right now, I think bigger. Think bigger is what I would tell you. I think it's tricky right now because I think we've got an additional element that's going on in the markets right now. That's hard because the institutional investors are really squeezing those larger assets down, right? But there's still room for people who are doing that are looking in that, say, 5 million to 10 million range, 5, 10, 12 million range, because the institutional guys want to deploy capital for 20 million and above. So I think it's a little tricky, but I would say in the end, think bigger than you are right now. And that's a general rule in life, I think.
Yep.
Yeah, and the key too is that there's mom and pops out there in that $5 to $10 million range. We bought mom and pop owners. They owned 25 units, and we paid $600,000. We've bought complexes of 300 units from mom and pops for over $10 million. So they're out there. You got to find them, and I think that's where you guys can really have some success. Because you may not be competing with a REIT or an institutional guy, with these mid-range mom and pops, and we find a lot of value with those.
And Jake, at the same time, to Buck's point, the mom and pops aren't looking for the 50 units or 100 units because they can't afford it. They're not thinking big like Buck says. They're worried about the duplexes and the triplexes and the quads where all the competition is, and their margins are so squeezed. But if they can move up into the $3 and $4 million range where they don't think they can get them, but they can get them, that's where the sweet spot is between like the $1 and $10 million range. I think is where the sweet spot is.
Yeah, I think if you're looking at, okay, so let's talk, let's say you want to syndicate something and get a non-recourse loan. So now you want to talk about something that's probably at least $2 million. For mom and pops, most mom and pops, they're going to be priced out, okay, at that $3 million point, say. But if you're doing this, why don't you just syndicate it? And if you can afford to put down enough to buy $1 million building, put that down and then syndicate the rest of it. And then guess what? You own an additional portion of that building because as the principal sponsor, and you've just amplified your returns. So I think there's just, there's a way to do this. And I think, again, especially in that sort of $3 to $10 million range, I think that's a sweet spot.
I agree.
No, we like playing there as well. So, guys, let's take a quick commercial break.
Are you stuck on the sidelines experiencing analysis by paralysis? Are you still trying to get your first multifamily deal done? We've never met an investor who's only done one deal. People are either stuck on the sidelines or they've done multiple deals. We always say that it's education times action that equal results. You come to the education side of the equation. Let us help you land your first deal. Call Jake and Gino today at 904-314-9473 to set up a strategy session or email us at gino@jakeandgino.com.
Woo! Love that guy. Now back to the show. Transition a little bit. What would you say your best habit for success is on a day-to-day basis?
Yeah, I would say probably the biggest thing for me is, again, on a day-to-day basis, I'm a big list maker, right? So I make big lists for myself every day on what I want to do, and and then I try to do the hardest things first, because I think you can get into the pattern where you're like you brush your teeth on there and just mark it.
We're not talking about teeth brushing, but guys, we do promote hygiene on the show. So,
right?
Gino calls it swallow that frog.
Yeah. Eat that frog, baby.
Eat that frog. Swallow it. Whatever you got to do.
Mr. Brian Tracy.
You got to get a sense of accomplishment and try to make incremental improvements every day in what you're doing. And with my own business team, I think I always push people a little bit harder, because I say that the tricky thing is that when the business starts to grow, you become less efficient. I mean, there's something about a bigger business that becomes clunky. You start becoming more like a bureaucracy. And so, I still like to say that we, in our business, we'll do things in a day that'll take another company a week to do. And that's really important. It's time.
That's pretty cool. So we talked a lot about mistakes on this show. What would you say the biggest mistake that you made in your entrepreneurial career?
Yeah, sorry about the leaf blower in the back.
It's that time of year, man, and I think you're in. Where you at? You're in California?
No, I'm actually in Illinois. I'm in the Chicago suburbs.
Oh, yeah. Okay, yeah. So we're just. I'm in Tennessee, and we actually just, I think, had the last few leaves fall. But anyways, transitioning back.
Yeah. But yeah, so biggest mistake. I think it's probably that first building I was talking about before, which, I lost a lot of money on. And I think the things that I would have done differently on that building is, first, I would have, tried to be less emotional. It's easier said than done. B, I personally would stay away from Class D going forward, although especially for a first acquisition of an apartment building. C, not understanding the importance of of first finding the property manager and making sure that you find somebody who's had success in the area managing properties of that kind. And as you mentioned, I think a broker who's probably more familiar with that area. So I think losing $500,000 will teach you a few things. So,
well, listen to all the learnings there. Picking the correct asset class, on the front end, getting prepared, getting the team in place prior to getting into the deal, doing better due diligence. So you learned a lot from it, and that's the key.
Right.
Very good. Going back to sort of the personal growth side of it, what was your favorite book besides the Robert Kiyosaki book that you mentioned?
I think other than so the Kiyosaki book, I think was a mindset change, and then I think I really am a big fan of the Think and Grow Rich Napoleon Hill book.
Oh yeah.
I just think it is. You see. You see all these, these gurus of self-help people that come up now, and
it's
not
all
saying that they're
recycled
bad.
from Napoleon Hill.
It's all recycled from that book.
Yep.
It's all recycled. It's pretty remarkable. You read that, and this guy's, talking about, he's a contemporary to Gandhi at the time. All this information is remarkable, and he's talking about The Secret, and then I'm like, hey, wasn't that a movie a couple years ago? Right?
Yeah, it was about 14 different spin-off books too. So
yeah, totally ripped it off. But I think that book is truly remarkable, and I highly recommend it to everybody.
I love that one. What has been your best deal and why? Real estate or just general business?
I would say in real estate, I got lucky. In 2010, this was off the heels of getting burned on the first deals. That I had a lender friend who was working with another guy who owned a bunch of buildings in Chicago, and he had made the mistake of tying them up in one big mortgage, and he was trying to sort of undo all of this. So he was trying to sell a couple of these buildings. And so I bought them, and I bought them probably at about a 20% discount at the time.
Sweet.
And in 2010, a 20% discount in 2010 to where it is now, Chicago's tightened up. In those areas, the cap rates were where I ended up buying those were the cap rates back then were probably around 8, and now they're sub 6. And I was buying then at 20% discount.
Nice.
So I was buying at cap rates of like 10. And in 2 of those buildings, I've already made $1 million in equity.
Nice.
Wow, that's great.
Maybe refi some of that out and roll it into your syndication, right?
Yeah, maybe. Yeah, I was thinking about that. It's those kinds of buildings. The other problem is that with these, you've got these huge prepayment things going on too, and
Mm-hmm. Hey, not a bad problem to have.
Yeah.
What project are you excited about right now?
Well, I think syndication in general is exciting to me, and I right now today I'm headed to Dallas. I'm gonna take a look at a building down there. I have a letter of intent on a building in Phoenix. It's about a 160 unit building there. I'm just excited about growing the syndication business and taking it to the next level. I think actually in some respects it's a particularly good time right now to be getting into syndication. And some people might say you're nuts because the market is tighter than it has been in a long time. But I will tell you that I think that's exactly why you want to be there now, because when the cycle resets, you won't be a rookie. You'll be a guy who's ready to pick up deals because you've been hitting singles and doubles in a tough market, and you're ready and experienced to go in there and hit some home runs.
Yeah,
it's never a bad time to start, right, Jake? It's never a bad time. We had a podcast with Jay Scott. Jay Scott flips houses on Bigger Pockets. He started in 2008. It was the worst time to start. So, it's never the right time to start. So just if you want to do something, you have to have enough reasons why. You'll figure out how to do it. That's
exactly.
I took a few notes, and the things that I really liked from today's show, number one, you talked about learning 10 times more from your failures. And I think that's really important for people to realize, because you might fail once, but the key there is don't give up. And I said a lot of times on the show before, one of the best things that Gino and I ever did, it took us 2 years to get into our first deal. the best thing that we've ever done is we just didn't quit. We just hung in there. We were pesky, and we kept beating down these doors, getting a ton of rejection, but we just hung in there, and then it finally, kind of snowballed for us, and we hit our tipping point. So very, very important. I like that. Get over your fear. Yes, it's scary. Yes, the first 3 deals, I was shitting my pants the night before we closed, right? We didn't know what was going to happen. But it's worth it. Get over your fear. Get comfortable being uncomfortable. I know it's cliche, but it's very important. Fellow list maker, I like that. That was pretty good. But overall, I think this is a great show. What's the best way for listeners to get a hold of you?
Well, I have the podcast, which is a Wealth Formula Podcast, and you can download that obviously on iTunes and Stitcher and all that. The home base for that is wealthformula.com, and visiting there, and there's all sorts of ways to get a hold of me on there.
Very cool. And I got to get a little plug for my G-Daddy over here. Guys, if you found value in today's show, please get on our iTunes page and subscribe. Give us a like. Give us a review. Right, Mr. G?
We like those reviews.
This has been reviews for Mr. G.
Yeah, it's been a great podcast because what I like about it is we always think about the doctor going into the office and performing procedures and not thinking about money, but you can do both. And if Buck can do it with this stuff that he's got on his plate, there's no excuse why we can't do it. Right, Jake?
We always talk about make it happen. Listen, guy's in his scrubs right now doing a podcast, going into surgery, then he's flying to Dallas about to do a deal. Right. Get off your ass, folks. Let's go.
That's right.
All right?
That's right.
Hey, that makes me sound good. Thank you.
Guys,
thanks,
had a great time today.
Thank you.
We'll see you.
Take care, guys.
We trust that you enjoyed the Wheelbarrow Profits podcast. Visit jakeandgino.com, your one-stop shop for everything multifamily. See you next time when Jake and Gino share more of their investing secrets with you.